if you are sitting in front of someone and if they ask you what's their USP, I normally say it's me because there's no one else like me. People like me would not have dreamed of saying anything or even setting up anything like that. I was thinking, I'll be lucky to be alive in 6 months' time. Always that crunchy peanut butter flavor that you get. It should be smooth, but it's not. But
A lot of people like peanut butter though.
I know. My son lives on it, would you believe? There are lenders out there who would just lend on properties, and that's a really good business model. That's not our model. Our model is...
You lend to people?
Yes, and it's slightly controversial. Education makes you risk averse. Sometimes you have turbulence.
Yeah.
Sometimes...
As we all do.
As we all do.
Yeah. How would you describe Lendhub's risk appetite in this market at the moment?
That's something we sell on. Low risk, low reward.
Welcome to this week's podcast, hosted by Navigate Finance, your real estate finance partner, where you can realize your potential. I'm joined here today by Asim Shirwani, the Chief Commercial Officer of Lendhub. Asim, thank you for inviting us to your offices.
You're very welcome, anytime. Always good to see you, Tariq.
Beautiful spot, New Bond Street, very central location.
We like it, yeah. Anything in and around here is very good. Yeah.
First and foremost, I'd like to thank you for inviting me to the England game yesterday. It was good fun and a great game. And, it goes to show you how much Lendhub look after their people, be it intermediaries, brokers, clients, or whoever. And it was a good night out.
I enjoyed it. I think we all got together. That was good. We had a bite to eat, so it's a bit to drink. And the result was cherry on top, if you ask me. The second half was very good, and we qualified, and we're all together. That's what matters.
Absolutely, and we can't complain because both myself and Asim, we share a love for Manchester United.
We do indeed. So it was nice to see some free-flowing football for once, for a change. We haven't seen that at our club for a while. But no, it was good, and our man Rashford scored, so can't be too bad.
Yeah, absolutely. A bit of a break from the usual United drama, let's say. So.
Yes, the anxiety that comes with what we've been supporting a team like United. We've had some very good decades, and now we are in rebuilding phase, if you like. It happens with every business, happened everywhere. So
absolutely, across the board.
Absolutely, yeah. So it was good. Good night.
Yeah.
Good night. Yeah. Bit of a sore head, but all good otherwise.
Yeah, a little bit. And you were just telling us just before we started, some of the famous faces you see around here on New Bond Street.
Yes. It's interesting. Sometimes we look at a celebrity who's probably not as famous as some of the others, and by the time you realise who they are, you walk past them. But you see where we are located. The other day we had Matt Holland, I want to say, and Zendaya, the Spider-Man, and his girlfriend. And we just ended up saying hello to him. He just walked past very quickly. We had David Beckham not so long ago. Tom Holland, is it? That's it, yeah. What did I say? Matt Holland. No, not Matt Holland, Tom Holland. That's how much I know about my Spider-Man.
Me too.
He's about this high anyway. So, he just very casually said hello and basically said we were telling other people not to take photos. You can't stop people from doing that. So it's and we had David Beckham pull over in his Range Rover the other day, and people were going up taking photos. So it's nice to be in London.
Yeah.
It's for me the best city in the world. Can't see myself anywhere else.
Yeah, no, I have to agree with you, and I'd like to imagine you were one of those asking David for a photo.
Mate, by the time I got to him, through the crowd, he'd driven off. No, I would have loved to. I'm watching his documentary.
It's a brilliant one, yeah.
But I can, I'm old enough to relate to a lot of things that they talk about.
Yeah, I'm sure, yeah.
But one thing, it was, I think, in episode 3, when it was Alex Ferguson and his kind of juniors basically said, look, when you set aside your differences, and to quote, he said, when you stop bitching about one another, it's amazing what you can achieve. And I think that's been our mantra as well. It's you win together, you lose together. And I think Man United back in the day, there are some clubs now, it's a good example of how when you knuckle down and focus on results rather than individuals, it's amazing what you can do.
Yeah, absolutely. One of the, I think, key points of that documentary that resonated with me was how they described Manchester United as a bit of an island. It was a safe space for David to hide from the media and a lot of things that was going on at the time. And it shows you how important it is to look after the people involved in any institution, regardless of what's happening in their life, understand their personal
Yeah.
journeys and kind of, guide them through that process.
Great, Tariq. And
Yeah.
I think it's important, little things like, calling HR human resources, because the human element of personnel is often overlooked. It's harder now that people are hybrid, not meeting each other as much as they once did pre-COVID. We don't know about each other's families, their problems. So, you just don't know someone might be having a bad day, but because you don't interact with them, and we are different at Lendhub, we'll come on to that obviously.
Yeah.
But we come in every day, so we are a little bit closer. But it is harder, I'm sure we all have family, friends, relatives that work from home more often than not. So, and you're right. I think it is us against them mentality sometimes, that, the stage mentality that helps, that spurs you on.
Yeah, absolutely. And let's understand a bit more about your personal journey. Everyone has a different journey or unique journey. And can you tell us a little bit about that so far? What has led you to where you are today at Lendhub?
Yeah, sure. Well, I started my professional life in banking. So I worked for NatWest, HBOS, which was kind of Bank of Scotland at the time, and then became HBOS, Barclays, and most recently Metro Bank. And Metro Bank was amazing for me. I know things haven't quite worked out at the bank, albeit hopefully temporarily, and they should turn a corner. I just happened to be at the right place at the right time. That the job that I did was not one you can get anywhere in UK banking industry. Brand new bank, clean slate, no legacy issues, no problems, and no customers. So, we had to just go and start from scratch. The biggest regret, and I used to say that when I was at the bank, was not joining it sooner, because, I came on board when the bank had already started trading, and there were colleagues there who'd been there right at the start of the journey. They were slightly ahead of us. So I did that for a number of years, more than I'd care to admit on a podcast, and made a fairly personal but conscious decision to come out of banking but stay in kind of lending. And I was fortunate enough to have one or two opportunities presented to me, and I joined a very, very good, very enterprising company called Lend Invest, sorry. And I was there for a bit, just under 2 years, I think it was. And I had known the owners of Lendhub previous to me coming on board. I think it's fair to say I was their bank manager back in the day, so I looked after them.
Okay.
Yeah.
So you knew them quite well.
Yeah. So I'd known Lendhub when it was being being put together, and I was kind of informally advising them, having friendly conversations, obviously at best of my ability, what they should and shouldn't do, etc. And so personally, I was close to the business anyway. And when you are like that, you automatically have an element of kind of emotion to something that you've seen grow.
For sure.
But it was quite interesting, because it was, I remember very well, it was in the midst of lockdown when the world was shut. And I was having a call with Prod. Prod is one of the owners of Lendhub. And just general stuff. And he was telling me about various things, his plans. And fairly casually, I think he said, "Well, what do you think? Do you want to come on board? When the world does reopen, we want to have an impact. We want to have a bang." Now, people like me would not have dreamed of saying anything or even setting up anything like that, because you need a certain type of entrepreneurial flair to even think. I was thinking, I'll be lucky to be alive in 6 months' time, like most of the people, in and around the UK, because we were all shut down. But no, and I had a thought about it, and obviously, nothing was really happening, so it was a good time for us to plan and pre-plan. And yes, and I said yes, and I came on board, and we were, if I remember correctly, maybe 6 or 7 of us at the time. Okay. And everyone working from home, very hard times. But what that allowed us was time to reflect, think, plan.
Yeah.
And personally, for me, having done something similar in my role at Metro, where there was really no, you kind of carved your own career and your own destiny in a way, to be a little bit cringy. And come here with a fairly blank, slate, and look, we made mistakes and we've done things right, but that's the beauty of a startup stroke scale up business. So yeah, we've been fortunate enough to have worked with really good people. Personally, and obviously we'll talk about Lendhub hopefully later on, but personally, it couldn't have got any better. It's we are a very transparent organization. We are very linear. We're very flat in that anyone can go and speak to anybody. And yes, so we started assembling the team. I contributed, others did as well, and we are now 24, 25 of us now. So in 3 years we've gone from
quite a lot of growth. Yeah.
And I'll come on to how it's all structured, etc.
Sure.
Hopefully later on. But going back to your question, so yes, personally, it's I love it. I enjoy it. Every day is different. Our loan book is now maturing, so it has its own operational challenges. So I get involved with that as when required. We've got the back book, but of course, turnover at a fair price is important. So we have to keep an eye on what's coming through the door and look after not only what comes in, but people that send us. So whether that's intermediaries like yourselves and others, or direct clients, or lawyers, or accountants, or whatever it is. It's really important that I know USP is a very overused term, and I don't really support my guys saying speed or whatever is that, because that's not unique. For something to be unique, it's got to be unique. So otherwise, it's not a USP. So the only thing that if you are sitting in front of someone and if they ask you what's a USP, I normally say it's me, because there's no one else like me. Whether it's good or bad, you can decide. And everything else can be replicated. If I'm doing something in 2 days, someone might do it in a day.
Yeah.
So we try and stay realistic. We try and manage expectations appropriately. But yeah, personally, we harbour a culture of respect and professionalism and teamwork, and I have to spearhead that amongst the other members of the leadership team. And yeah, it's one thing we don't like around here, and I try and practice it as much as possible, is what is sometimes known as a DDD culture. Don't do, delegate. You can't just you've got to lead from the front. You've got to do it yourself before you delegate. And I think it's fair to say that pretty much everyone at Lendhub roll up their sleeves and get involved in anything they need to get involved in.
Yeah, and it's interesting what you said about joining Lendhub, at the end of COVID or during lockdown, and obviously working throughout those restrictions, as you say, gave you a lot of time to reflect and build and strategize. And it's quite a unique way to actually start working in a business. So quite interesting. And of course, the founders of Lendhub must have liked what they saw and cherry-picked the best in the business to get you on board. So
I'd go along with that, mate. I'd take that any day, yes.
We'll use that script anyway.
Either that or a basket. Well, it's one of the two, yeah.
Yeah. So can you tell us a bit more about Lendhub and a bit more about, what products and services you have on offer and how you can apply them to, the real estate sector in the UK anyway?
Sure. I think we've matured over the last 3 or 4 years quite extensively, and I think it's fair to describe us as a bridging and development lender. So we are a principal lender. We source money from various sources of funding that we have available to ourselves, and we go to market and we do everything in between. So the origination, the underwrite, the front, the middle office management, the back book management, and what we like is we are, as you quite rightly alluded to earlier, we are a London-centric lender, purely because we are based in London, we understand the London market. But that's not to say that we wouldn't look at stuff outside of our kind of comfort zone. So I think it's ripple. So we started with what we knew, which was the London and the zone 3s, the zone 4s, and the Surrey, Sussex, Hertfordshires of this world, sometimes known as home counties. I don't know where that stops being a home county, but it's quite vague. But that's how we started. So we wanted to lend into areas that we understood and we could kind of touch and feel. If things went sideways or didn't go to plan, we could go in and kind of deal with it. And that's how we started to build the book. We are institutionally funded. We have a number of banks and institutional funding lines behind us. So, but the great thing about here versus some of our other peers and competitors is that we take positions. So we put our own money into a number of the deals, warehouse money, internal money, proprietary funding, whatever you want to call it. So that gives us an insight. One of the first things we ask for is, what's your skin in the game as a borrower, but we're also quite happy to tell them what our skin in the game is, what we have at stake or at risk, so they understand. And it gives our funders a lot of confidence as well. We do, the bulk of the business, Tariq, that we write is in this bridging and refurb space. And Lendhub, as I mentioned earlier, started life as a development lender, right? So we, at heart, it's in our DNA. We don't shy away from structuring deals that look and feel like a development loan facility. So when we looked at enhancing a product from bridging and development to bridging and perhaps refurb, we modeled our refurb product as though it was a development product, which means that we'll roll up the interest, we'll come with you every second of the way, we will do periodic drawdowns, you don't have to have. So what was very commonplace back when we started doing it 2.5-3 years ago was you will get a bridge and then you'll get multiple little bridges, and every time you draw down,
tranches,
and they will take away, the lender will take away an element of interest and park it away. So it's effectively, it was retained interest, but it was being done upon drawdowns, which worked at the time because it gave people the money that the liquidity, the money that they needed when they needed it. We kind of wanted to do it slightly differently, and because we understood the pros and cons of development finance, we decided that we're not going to ever do that. So we either give people a bridging facility, and they tend to be either when it's uber urgent, there is no time to take it to a bank, or it's unmortgageable, the property, or unbankable. It could be the property, it could be something around the borrower, borrowing entity, the property. They just need to regularize something, and we're happy to. That's if the definition of a bridge is you need to go from A to B, and you're not quite there to go to B, and you need a bridge. And the rates historically were slightly higher, although with base going up, there's not a lot in it at the moment. But so we do a lot. We like stuff like HMO conversions, where we fund 100% of the works, or someone looking to buy an old hotel and chopping them into flats, or buying a block of flats and making it into a big house. It could be either or, anything, if it makes sense. I'm slightly old-fashioned insofar as I look at the who more than the what. So if there is a deal where perhaps the property isn't quite in the location that we like, or it's not quite ready for us to have a look at, but it's a really strong borrower, for me, that's a much better position to be in if we were to reverse it, and if it's a great property and a weaker borrower. But we support, we look at everything, and I'm kind of pleased to say that we've now gone further afield. We now, having built up a fairly robust and a fairly diverse book, we have gone to places like, we've done a deal in Dudley, we've done a deal in Doncaster, we regularly do stuff in Birmingham, so Midlands we're okay with, even though deliberately we haven't got the foot soldiers in these, because my BDMs are not geographically split, so they're relationship driven. So if your BDM is X, it doesn't matter where you're based, unless you tell me. And I think we're going to stay with that strategy for the time being.
It's a much more personalized approach, maybe.
Correct. Yeah. And we also have an army of underwriters who are very, very happy to manage those relationships. So, and it's all very intertwined in a good way. There's a very massive overlap between our front office, so the BTMs, the originators, and the middle office, which is the case and credit managers, who actually look and structure the deal, particularly post-valuation through the legal DD process. And us, that kind of overarch, are very involved throughout. It's not just you do the deal and everyone is involved. The originators more so on the broker relationship side, But the guys like me and others, they, you know, we have to make sure that we're doing the right thing, the liaison with the lawyers, valuers, making sure that we're not, you know, missing anything, and we're doing it at a pace that's kind of driven by the borrower. You know, it's not always super urgent. You know, sometimes as you know.
Sure.
So it's that, and I think it's just making the whole journey. Customer, and I include brokers, and they are my customers, right? It's very rare that we don't do a lot of direct business. We can do a little bit more, but a lot of what we do is intermediary driven. So therefore, they are my clients, they are my customers. So the customer journey, from the time that they reach out to the time it completes, should be pleasant and market. And if it's not going to be a journey, there's no point. And anyone in this industry will tell you, no one likes slow nose. Doesn't matter how doesn't matter how hard you think you are trying to get a deal.
Yeah.
You should be able to work out very early on in the process whether it's one for you or not. And that sometimes means reaching out to the underwriters, the risk managers, or giving our brokers access to them. Which is something that we are very actively doing at the minute. So last night, and obviously the viewers of the podcast probably won't relate to that, a couple of the people that you met last night deal very regularly directly with our underwriters.
Absolutely.
There was one or two that I met for the first time.
And, you know, I can attest to that. You know, as an intermediary working with Lendhub, it is always quite clear, you know, whether or not it's going to be a transaction for you guys very quick. You know, it's not drawn out, and the process thereafter on the transactions that we've been working on so far have been very seamless. So the process is very important for both, you know, the intermediary and also the client. And actually kind of goes on to my next question, which you've more or less answered. But, you know, how would you describe the client experience, you know, working with Lendhub from, you know, let's say inception to completion?
We like to make it as pleasant as what I'm thinking of. Probably a good analogy is your flight from here to, I don't know, Lisbon. You know, everyone on that crew, on that plane, is doing all they can to make it as smooth and as safe and as pleasant as possible. But sometimes you have turbulence. Sometimes,
as we all do.
As we all do. And that's no reflection on the airline, on the crew, or anything like that. It's just it happens, and it's outside our control. But how the pilot navigates through that, you know, bad weather or turbulence or whatever, is what makes it either pleasant or unpleasant. So as long as the passengers are kept aware of what's going on and they don't have to worry about anything, or, you know, their oxygen masks are not dropping in front of them, then it's okay, right? So that's how we like to do it. So if it's very rare that we have a really smooth transaction, right? It's always that crunchy peanut butter flavor that you get. It should be smooth, but it's not. But
a lot of people like peanut butter, though.
I know. My son lives on it, would you believe? Yeah. So, but you know, it doesn't. If it's crunchy, doesn't mean it's bad. It just takes you a little bit longer to chew. So that's what it is. We're not a bank. We get transactions that are prickly, that are quirky, that are out there, that are different, and that's what we offer. That's what we supply. So as long as the broker / the borrower / advisors are kept abreast of what's going on, I tell my guys regularly, even if you don't have anything to tell the broker, call them and tell them that you don't have anything to tell them. They can't know less than you or the borrower. It just doesn't work. And we make a very conscious effort to do that. Like, sometimes things let slip because they're busy, or they think, you know, it's not important. And conversely, there are brokers, intermediaries out there who trust us, and they don't really care or mind, because they know that, you know, we're not going to do anything untoward to the client or anything like that. So, you know, it's really, really important for me personally that the customer journey, from the time, as you said, that something comes in to the time it gets paid out. And don't forget, Tariq, a lot of our facilities don't, and the actual hard work starts upon completion. Because we have follow-up drawdowns. We want to make sure that what we have agreed in terms of milestones and things are being met. We are on the front foot. So, you know, there's no, if I do a 12-month facility, there's no point in me contacting them in the 12th month. We need to be on the ball month 5, 6, 8, 9, just to make sure that they are doing what they said. We don't have hard covenants, you see, it's a short-term lend.
Yeah.
And we're not the type, we're quite soft in our interactions with our clients. We trust them to do the right thing, purely because we feel that we do a lot of that kind of work at the outset. So these people that we lend money to kind of know what they're doing, and we treat them as adults like that. So but it's difficult at times. Sometimes, the market turns against them. Sometimes, they and look, a lot of these property guys are entrepreneurs, right?
Yeah,
They're easily deflected. They're easily, if they find something over there that's going to give, they just focus on that.
Well, exactly.
Yeah.
It's a very competitive marketplace.
Yeah. And I'm sure you have clients like that as well, and you need to bring them back to, can you deal with this first, please? Yeah. And it's interesting, but property is even though it's very volatile, and you might think that it's quite exposed to swings, recessionary and otherwise. I think the love affair between people and property in the UK is not likely to slow down anytime soon.
Yeah, absolutely. So it's always, a great marketplace to be in. So Asim, it'll be interesting to know a little bit more about a transaction that you particularly enjoyed going through. What was it that you enjoyed, and could you give us a bit of information on what it was like?
Yeah, of course. I think that the one that springs to mind is it's from one of our very good brokers. I'm not going to use one of yours, by the way, because that would be wrong.
Absolutely.
Yeah.
As much information as you provide without getting in trouble.
Without getting in trouble, yeah, exactly. So this is not one of yours anyway. So we recently completed, we were approached by one of our good brokers, good friends, who's not based in London. He's based up north, and he's very well known in the industry. And he wanted us to look at a development exit for a decent developer. No stress or problems. They just wanted to get out of their current arrangement, allow themselves a bit more time, maybe pull some money out, and kind of move on. But what I liked about that transaction, it was done in super quick time because we were against hard deadlines. But the broker, every step of the way, was preempting things. So there was a little bit, the one that springs to mind immediately was there was a little bit of work that needed to be done. So there were certain areas that hadn't been practically completed. So it was effectively, we had to go and give them some money to finish. And when a property, particularly a block of flats like that, is in that phase where it's not quite complete, but it's almost complete, just snagging, but it can't be signed off, it's very, very difficult, and I would say precarious to value.
Yeah.
And it's the temptation is to knock it down to a point where it feels safe. And what you can't do is just simply say, oh, it needs 100 grand, so just reduce it by 100 grand, because it's still half baked, still not complete. And I remember the broker kept, every step he kept saying, you know what, watch out for that. Can you speak to the valuer first? Tell them what it is. And then that went on, and we did that. And, it was a sensible, grown-up conversation with the valuer, and we kind of, So the point I'm making is we did that before he sent his draft report or any kind of report, because, and that to me, that gives me the comfort that, one, the broker knows what he's talking about. Two, he's close enough to the client, because it may have happened to him before, and he's definitely close enough to the actual property.
Yeah.
He knows how much work was needed. It was nowhere near him, but I think he drove down and he had a look around the property. And that kind of carried on throughout the legal process as well. He just kept kind of giving up heads up on red flags. Be mindful of that. It wasn't the case of, let's see what we can get away with.
Yeah.
It was, bringing out the problems before they became problems and dealing with them. And it was quite enjoyable and almost refreshing to work with a broker like that, who just didn't hope that, it's low-hanging fruit, shut your eyes and see what we can get away with. And it doesn't work, because lawyers and, our advisors are briefed and instructed to do that. So sooner or later, unless they are negligent, which is very rare, it comes out. So why not just bring it out in the open right at the outset, or as early in the process as possible.
Absolutely.
And deal with it. And I'm pleased to say that it was, unwritten very quickly, went through all of the legal and valuation kind of DD smoothly. We paid out, and I think there are a number of units that have now since been sold, and we are comfortable. But the reason why I mentioned that is that it wasn't the best kind of in terms, it wasn't the biggest or the smallest or whatever. It's just very enjoyable to work with someone who was doing very regularly something that perhaps other brokers should do more of.
Yeah, well, I say this to my clients all the time when they want to understand exactly what our terms of business are. It's very key to have a broker or intermediary who can collaborate very well, open communication with the lenders that they're dealing with, and basically achieve the shared objective together. So I think good collaboration is very key in that circumstance.
Absolutely,
And it makes the process all the easier. And especially, if the broker knows that there could be some skeletons in the closet along the way, it's always good to bring it out because, when it gets to legals, it will come out anyway.
Exactly.
So saves a lot of time and a bit of money.
And it builds credibility in my mind.
Yeah.
Both broker and the borrowers. Yeah, you're 100% right.
Yeah. So Asim, we're going to segue a little bit away from Lendhub now and know a bit more just about you personally.
Sure.
And I'd be interested to know a little bit about, if there were any influential figures in your life or in your upbringing that influenced, this career path, let's say.
I think, well, in my early life, and because I lost my father very early. I was 15 when my dad died, and my mother brought us up single-handedly, and she was quite a tough lady, and I guess she had to be. She was also very practical. And I think I learned that at a very early stage that you can't assume anything. Nothing is given to you. Nothing is. You can't take anything for granted. I didn't have a difficult childhood. My mom, my mother she went back to work. She looked after us, me and my two sisters. But it was suddenly you lose your dad. Your father figure. My father had a heart attack and died almost instantly. So there was he wasn't ill or
there's no
preparation, nothing. And he was 48 and I was 15, very young. And as we later found out that the younger you are with heart conditions, the less likely you are to survive. The survival rate very oddly gets better as you get older because your blood is thinner. Anyway.
I never knew that.
Yeah, but it's not something that's commonly known. So, and he was a heavy smoker and things like that, so they all contributed. But so I think in early part of my life, definitely my mother was my inspiration. Later on, I know it's going to seem really odd, but my kids, my wife obviously pulls it all together. God knows how she does it. I can't do that. Anyone she works and she basically holds it all together. So the less I say about that, the better, because it's difficult. But I'm not going to go. I mean, there are external people that came into my life, but. Sure. My son is now a very avid Man United fan, and
as he should be.
And we live obviously not in Manchester. We live in Surrey. All of his mates are either Fulham or Chelsea, to the point that they only buy blue cars and things like that.
Oh wow! Okay, so they really do
hardcore. Yeah. And I told him very early on, look, you're gonna have to find somewhere else to live if you want to go down that route. So you're not staying here. But he drives me to do things. He goes and buys tickets and we go to. So and he's very, very single-minded.
Yeah.
And I learned that from him to a degree because I jump around. Right? I'm easily distracted. I do this, bit of that. He knows what he wants and he goes,
focuses the attention. Let's say.
So I think that the influence kind of varies from what part where you are in your life.
Yeah.
There have been others, but I wouldn't say that they shaped my thinking in the way that perhaps my immediate family, starting from my mother, who's had a great influence to us the early part, and now my kids. So I often ask when I interview people, what gets you out of bed? What's your motivation?
Yeah, exactly.
And if I'm honest, I might be giving this away, but if I'm recruiting for a sales role, I don't mind if they say money, because if you're not motivated, some people shy away. No, that's not. Yes, it's important to be happy. Mental health is important, and everything else comes with it. But you have to be kind of commercially minded.
Yeah.
And if you ask me, it's my family. I get out of bed and do what I do every day because God's blessed me with a great family. So yes, it's personally those are. But you meet people along the way. I was telling the guys because we are doing Black History Month this month,
okay.
and each one of us we've asked people to nominate their an inspiring black woman that they think have made a. And I was lucky enough, and I'm going to be very biased here. I was lucky enough to meet Mrs. Rashford not so long ago.
Oh,
yes,
really?
Yes. Okay. It was actually a little while. It was a week after Rashford scored that goal in Paris.
As in his mother.
His mother, yeah.
His mother, yeah.
And his sister, but they're both there. But I got talking to her.
Yeah.
And she's an incredible woman. She probably won't even remember meeting me, but it was 3 or 4 years ago. But it was, like I said, it was the PSG game when
he scored that penalty right at the end. Yeah.
The week after that, everyone was on a high.
Yeah.
And some of the things that she was saying, they had a really hard kind of life when Marcus and the kids were young.
Yeah.
And it wasn't her speaking. We were just talking, and we just got talking. It was a lunch at it wasn't like she was a guest speaker or anything.
Yeah.
I was interested, so I was asking, and obviously because of the Man United connection, etc. I was starstruck almost. And yes, and she's a very tough woman in many ways. She reminded me of my own mother.
Well, I was going to say, curiously, from what I know about Marcus Rashford, his mother was a single mother, and Rashford often refers to her as his motivation as well. Yeah. So it's something that you share in common.
Absolutely, but my inspirational black woman has got to be her purely because I've met her and she's to a degree in the public, but she's not. She doesn't like all of that. She stays in the background, even to the point that I took a couple of pictures and she was very shy about. She said, "Taking enough posters, please. I don't like this sort of thing." His sister is very pleasant, very nice, and she was absolutely fine with all of that. But Lady Rashford, as it were, she was very cagey and coy. So she doesn't like the limelight at all. And I mean, it's obviously evolved a little bit now. He's a bigger star. He wasn't as big back then. So yes, it's quite interesting that we have people so close to us in our lives. And sometimes you meet people. It's a matter of just asking, being inquisitive, asking questions.
Yeah, absolutely, absolutely. And I find it very interesting to understand a bit about people's initial years in this world, because I think most of the way we think and behave nowadays is very much influenced by our childhoods, and that does evolve into your family dynamics as you get older, and it often is your children that inspire you as well. So it's very honourable of you to share that information with us. So it's a bit of an interesting take on the next question, but if you could go back in time to a younger version of yourself, what would you advise him on what is to come?
Oh, okay. So what is to come? So I don't know if you've ever read Steve Jobs' autobiography. The first, or one of the first lines is, "Life is not fair." The sooner you come to terms with that, the better. You can't, I think I mentioned this earlier, you can't take anything for granted. You've got to fight for it. You've got to work for everything. So the two things that I would say to my younger self: one, be prepared to work for anything that you ain't going to win the lottery. You're going to have to work for it, right? And the second thing that I would say to my younger self, 100%, is to take more risks. I find in our household, education was big. Right? Everyone had to get a degree, and everyone had to, because I ended up getting a master's degree, and my mum funded it, and all of that. But in some ways, and it's slightly controversial, it's my opinion, might not be right, education makes you risk averse. And then I got into banking, where you have to weigh risk against everything you do. So I didn't take as many risks with my day-to-day life, my investments, whatever it is, because I played it safe. And playing it safe is fine if that's your appetite to risk. Low risk, low reward. That's the reality of life. So if I could go back 25, 30 years, I would probably have a cheeky here and there, flutter, whatever you want to call it, which I never did, because when you are a young, being brought up by a single parent, you just don't feel that you can risk what you have.
Yeah.
But you should, if you believe, and look, it's cliche and it's strange, but believe in yourself. No one knows you more than you do. Back yourself.
Yeah, absolutely.
Yeah. So that's what I would say.
And on the theme of risk, and to bring it back to, what you're doing here at Lendhub, risk mitigation is a very big thing in real estate lending. How would you describe Lendhub's risk appetite in this market at the moment?
That's something we sell on. So we because right down the spine of the business, all the way from the top to the backbook guys, we understand what people go through, because we've either had our own property portfolios or looked after people with large number of properties and the problems that come with it. So I think one word, it's sensible. It's not one size fits all. Going back to your actual question, which is, what's our appetite like for risk? If it makes sense, we would do it. We've done things for people that we trust and know would deliver. Basically, ripping up the rule book and doing what we think is right. And on others, we've had cases where on paper they look okay, but when you scratch beneath the surface, there are things, so we scale it back. We've not had any capital losses. We've not had any, and we've been going for a while. So I think our risk, we're not risk averse at all. We don't believe that we should charge over the odds. We're not. Look, there are lenders out there who would just lend on properties, and that's a really good business model. That's not our model. Our model is...
You lend to people?
Yes.
Yeah.
So we start with the old Campari, who is it, what have they done, etc. And I'm not saying that if you haven't done it, we won't do it. We might... It's risk-adjusted, not pricing per se, but risk-adjusted take on things.
Yeah.
If what I didn't want to have is 4 boxes, and if you tick 3, you're through. It's not. That's the buy-to-let model, and it has a place in that world, and it works, and it's great. But we really want to get to know you and for you to come back and understand why you're doing what you're doing. And look, a lot of people, and I go back to what I was saying, about taking risks. Sometimes you look at something and say, the guy's mad. It's never going. What's the plan here? And then you look at their past history and what they've done, and you've got to think, it's got something about him. And other times you say, well, no, he's never going to get out. So, so it's really a judgment call, but we base our risk-based decisions on facts. And sometimes it's very beneficial to meet the borrower.
Absolutely.
Even if it's nowadays on Zoom or Teams. Yeah. But we try, back in my banking days, we wouldn't lend to anybody we hadn't met. We had to meet. Yeah. But a lot of those were bank customers, so it was obvious that you already knew them or you wanted to know them. But here we don't always have to meet, particularly if they are too far out or whatever, so we just rely on. But I feel that if it's on the edge, kind of, on the fence, sometimes meeting the borrower helps you make a decision. That decision could be that we don't want to go anywhere near that guy. Yeah. Right?
Oh, exactly. It could go one of two ways, right?
Exactly. But sometimes when you sit in front of people and they explain to you why they're doing, what they've done, etc., it helps you make that decision or take a punt a lot of the times. You know? That's it. So we have a fairly open mind about things.
And I think, one thing that a lot of people need to be aware of is a very personal journey between client and lender. And I think it goes both ways. I think borrowers need to know not only more about the lenders that they're working with, but the individuals that they're speaking to as well. Yeah. Which is part of the ambition of this podcast. We hope that it can maybe make this market a little less ambiguous and more interpersonal. And I think that's important as well. So it's a good theme you bring up here. Just a question on the Bank of England base rate. In the last 12 to 18 months, we've seen, some unprecedented hikes. It's been about 14 in a row. Now we're seeing a bit of stabilization at 5.25%. Where do you see this going in the next months to the next few years, really, in your opinion?
That's a very interesting question. I'll tell you why. Because if you'd asked me this 2 weeks ago, I would have had a very different answer to what's happening in the Middle East at the moment.
Well, yeah.
So we've already seen, or we are seeing, petrol prices, diesel prices go up. Now that may be completely unrelated, but when there is uncertainty in the market, people just start to factor in these things. And when petrol goes up, when transportation costs go up, everything goes up. I think if there is, by some miracle, peace in the Middle East, or the problem at hand is resolved quickly, I think, this is my view, I think that the Bank of England are unlikely to increase the rates. I feel that in spring, early summer next year, we might even see the base rate starting with a 4. I don't think at any time in the near future is going to go back to where it was a year, 18 months ago. So it's not going to start with a 1 or a 2. I don't think it can. I don't think it's good for any economy to have such low interest rates, unless, of course, you're Japan, which is a completely different. So I think that we are a savers nation. People do want to keep their money and then get something back. Banks need liquidity. Bank needs to hold on to deposits. I think if it's 3.5, 4, I think we're doing well. I think it'll be in high 4s. But I know that's not your question, but we also have a very, very keen eye as lenders on swap rates. Base rate is great, but it's quite restrictive in what it does to the wider economy. If you ask, I don't work in the industry, but I talk to people. At the moment, what I hear is equities market is almost dead.
Yeah.
Fixed income is doing okay. Investors don't like fixed income. It's not a good return. So, but it's safer. So at the moment, the money's the fund managers, whatever, they're applying money into fixed income just to keep it afloat. But they have to go back to stocks and they have to go back to equities. So I think that the whole machinery is not going to allow, it's not sustainable to carry on increasing. And what surprises me, Tariq, more than anything else is, there are some really clever people looking at these things, but surely they just can't be the only mechanism to control inflation.
That's what I've been thinking for a long time. Yeah.
So, it seems artificial. It seems, and I'm not an economist, so I can't really blame, anybody for that. I don't know. But, we have to be sophisticated enough to find another way to at least control, not reduce necessarily, but control and make it manageable. But it looks like if this continues, then, cost of living is already. And the other thing, obviously, the energy prices that have come down. Fuel prices is one kind of facet, one aspect. Yeah. So, look, it's anyone's guess. My as an analyst, I don't think we will see any more increases.
Let's hope.
Yeah.
Not, right?
And I think that come March, April, May next year, if everything goes as it has been, also, the analysts are kind of factoring in a Labour government. So that's another thing that they've got to factor in. The polls it's landslide at the moment, and when that happens, you've got to artificially think that it's this going to curtail growth because Labour's policies are very different to what we've been used to in the last 12 years. So it's difficult, but I would really hope, I would like it to not go any. Fed have taken a pause. They've said to everyone we're not going to So it's anybody's guess, but my guess is it won't go any further up.
Yeah, so, very interesting, Asim, that, you highlight so many potential externalities here, so many variables that can influence, the base rate. And, it could be political, and it often is, So we just have to see how that pans out.
Agreed.
And on to the last question. Last question is always a little bit of fun and a bit creative. We ask everybody the same, all of our lenders the same question anyways. And it is, if you had £20 million in equity to invest in real estate in the UK, how would you choose to invest it using some of the products you have available here at Lendhub?
That's a very good question. I wish this is all unprepared anyway.
Yeah,
but,
exactly. You don't have much time for this one.
And I was saying to the guys earlier, I hope there are no curveballs, but this is not really a curveball.
No.
20 million, I would, and look, I've got to base this on that as though I'm investing with someone else, otherwise I'll just pay off my mortgage and everything else. But I've got money to invest, I'm advising someone and they're doing it. I would tell them to split it 3 ways. I would ask them to perhaps buy something in London, something residential in London. I would probably ask them to look carefully at warehousing in the Midlands or slightly outside London, because the old data center type properties are now being used to store goods. And I think the huge lifestyle change that COVID has brought about, in addition to working from home, is the delivery culture. My daughter orders 10 things and returns 9, but those 10 things got to be stored somewhere. So I think there will be a little bit of a spike in demand for large, modern, good quality, stock controllable warehousing. And Amazon already, leading the way, but not everyone can afford. As a tenant, they dictate the terms, I'm told. But you've got lots of others that stocks is produced, mass produced, in wherever it is, Bangladesh and Turkey, and you've got to hold it. But it's still cheaper than having retail presence. So I would say residential in London, maybe warehousey in the Midlands or somewhere where it's commutable. And I would, I don't know, I was going to say tell them to buy a little castle in Scotland, because they go cheap. They go cheap, if that's your aspiration, but no, I won't advise that. I think something that's high yielding.
Yeah.
Low capital appreciation, high yielding, because they tend to stand the test of time a lot more than the London market. That said, I think it's a lot more, the prime central London market is a lot more resilient than people think it is.
Yeah.
Even with the after the war in Russia, that kind of money drying up, we haven't really seen a massive drop. Things have priced appropriately.
Yeah.
They're selling. Large mansions are selling in London.
It's notoriously resilient.
It is, yes.
In London, yeah.
And also London is London, right? It's like Central Park, and people want to buy property here, and people have good businesses. They have liquid money. They don't want to live outside London, so why not? So yeah, I would say residential in London and perhaps commercial stroke warehousing somewhere where it's still close enough to an airport or whatever you need to transport goods. And I think that is a sector that's going to grow.
Yeah, absolutely. And I agree, and very, very sound and insightful advice for all you investors watching this, looking for ideas. Lendhub will support you on all of that. So,
No. Yeah, of course we will.
Yeah, Asim, it's been a pleasure speaking.
Thank you.
Yeah,
anytime. Yeah.
We'll stay in touch.
Yeah, absolutely.
Take care.
Thank you so much.
Thank you. We hope you enjoyed this podcast. If any of the products or services mentioned in this video are of interest to you or anybody in your network, then please do get in contact with us at info@navigatefinance.com, where you'll be put through to an expert advisor who will provide you with everything you need to know and guide you through the process to achieve a cost-effective solution to your inquiry. Thank you.